It is 14th of March on a Monday, and time now is 5:18 p.m. in Singapore itself. My name is Dylan, and welcome to my daily trading analysis video. Alright, so today we're not going to start off with the euro against the US dollar, but we're going to start off with the Australian dollar against the US dollar. And alright, here you are seeing the day one chart. The Australia against US dollar is now trading above the 75 cents, a currency level where the Reserve Bank of Australia gets uncomfortable with, and most likely will increase the probability of a rate cut in order for them to achieve a lower currency value which they favors. And we do know that last week we have the RBA Deputy Lowy, who came out to talk about the Reserve Bank of Australia prefers a weaker currency level, and that there's still possible rate cuts if they want to do it. So therefore, we have right now see that in the day chart itself, the price, or rather into the weekly chart, the price is now seen about to hit a key support, previous key support and resistance level at the price of 0.7605, and that is a level where we can look for a sell opportunity for the Australian dollar against the US dollar in anticipation that the Reserve Bank of Australia may cut interest rate next month. Into the H1 chart, the 1 hourly chart itself, it is still clear that the price is still moving on the uptrend, and therefore is still expected to appreciate further. The Reserve Bank of Australia interest rate decision is still a period of time away from and it will only be taking place in early April. So the dollar may continue to weaken as the Federal Reserve is most unlikely to raise interest rate this month, so that will cause the price to appreciate. So either we will be looking for a intraday buy opportunity at the current level right now, somewhere at the support level of 0.7508, or if not, we will be waiting for the price to appreciate all the way till it touches the key resistance level at 0.7605 to look for a sell opportunity. So that is for the Aussie against US dollar. Touch pretty much on that. So let's quickly move to Aussie against the Japanese yen in the day one chart. Right, we have seen that the price has appreciated significantly and moving towards the top of a falling trend channel where the retracement level of 38.2% coincides together with at the price of 87.29. So that is a key level that we can look for the sell. And into the 4 hourly chart, we have seen that the uptrend still proved to be strong, and it did broke above the key resistance level at price of 86.06, which also signals that the price may, or rather should, appreciate a little bit further before we see the price begin to reverse. And fundamentally, price will plunge eventually as the Reserve Bank of Australia may cut rate next month to curb strengthening Australian dollar, and the yen may still appreciate as the safe haven demand increases along the way. So look for the intraday buy in the smaller time frame as price retraces to probably 85. That's somewhere about this level, or wait for the price to reach the top of the falling trend. That's based on the day one chart. So that's for the Aussie against Japanese yen. Next we have a euro against the Japanese yen. In the day one chart, we have seen that the price has been depreciating steadily on the downward trend with a significant retracement every time before the next wave of depreciation. And right now the price is seeing registered at the key previous support register level, the price of 127.18, signaling for the beginning of another wave of depreciation, and the price is already seen making significant retracement as well. So into the smaller time frame, let's look at the 4 hourly chart. We've seen that the price has been resisted at 127.18. That is also the retracement level of 50%. So really look for a sell opportunity right now, or wait for the price to retrace in the smaller time frame for the better entry price. So that's very straightforward for the euro against Japanese yen. And we are also expecting that the euro may depreciate as a correction based on what happened last week when the ECB decided to cut rates, but it worked against it and appreciated, and the euro rallied instead. Alright, so that is for the euro yen. And next we have the dollar against the Japanese yen in the day one chart, we have seen the price has plunged since then and has been moving in a sideways movement, consolidating for the past 1 month. And into the 4-hourly chart, price is seen consolidating while making lower highs, as you can see right here, and resisted by a falling trend line itself. So the dollar is unlikely to appreciate against the yen for the fundamental reasons, as we know the Federal Reserve is unlikely to raise interest rate, and yen it may strengthen on demand for safe haven assets, and therefore we are looking for the sell opportunity only as the price retrace again back to the trend line itself, or rather at the top of the consolidation we can see right here, to go for a sell. And that's really very straightforward for the dollar against Japanese yen. Last but not least, yes, we're gonna be touching on the pound against US dollar in the day one charts. Alright, based on the structure that we have right now, a probable inverse head and shoulder. Therefore, we expect the price to appreciate further till it reaches the neckline at the resistance level of 1.4598. So, expecting the price to appreciate further. Therefore, zooming into the 1 hourly chart, we have also seen that the price has been appreciating steadily wave by wave after every consolidation. And right now, the same thing is happening. We are waiting for the price to consolidate further, close enough to the support level at the price of 1.4314 at the retracement level of 30.2%, and the previous high back then as a support level to look for a buy opportunity. So that is very straightforward for the pound against the US dollar. And with that, I have come to the end of today's trading analysis video. So thank you for watching, and I'll see you again tomorrow.